Morning, everybody, and welcome to Q&A with Whitey. I hope you're there ready with a cup of coffee. Got my grumpy old man mug with me today, and probably rightly so. I'll explain in a sec. And of course, don't forget your morning tea. Now, this morning, these are choc chip and white chocolate muffins that are sugar-free. I guess I can't take a slap at my wife for normally giving me stuff that's not diabetically friendly. There you go, you get that. Yes, grumpy old man mug today. It's, I went and saw my skin specialist, as I do with Pommy Skins on each year. This year I lost the argument and he won with his scalpel. So a few bits hacked out of my face and trying to think of what my pocket square should be this morning. And they say with people who do all that style sort of thing, which I'm certainly not one of them, but it's meant to match in with your attire. So I thought a pocket square with red blotches on it sort of suited my face today. Anyhow, next week will be less fun, but we'll deal with that then. Anyhow, I digress. Let us get on with this morning. So thanks for joining us. Make sure you got your morning tea ready. And we must, as we progress, thank our sponsors for supporting us and enabling us to do what we can do here through the FBAA, both with all of our events and our conferences that become free of charge, and the support they give us so we can continue to do more for you. So our thanks go to ALI, Bluestone, Finstro, Prosper, Len, Suncorp, On Deck, Pepper Money, AAMC, Strive Financial, Insurance AdvisorNet, Credit Fix Solution, and Trailbook Loans, all wonderfully lovely people, and we thank you so much for your support. All right, this morning I want to welcome our very special guest, and I think we should rename this morning Whitey's Angels or Charlie's Angels. So I've got the loveliest women in our industry joining me this morning. I'm extremely lucky. So welcome, ladies. How are you all? Ladies, hello. Ah, here we go.
Morning.
Morning, Charlie.
Morning, Charlie.
There we go. We got Charlie's Angels on the road. Thank you, ladies. Welcome, welcome. And you are all angels, let me tell you. Yeah, so wonderful to have you all with us this morning. Thanks so much for joining us. We've got a whole heap of questions to get your thoughts on today. And I'll ask those questions of you shortly. They've been sent through to us, and we may get some that come through to us as we go through the morning. And Mariah, our wonderful coordinator, sits in the background here. We'll shoot them through to me if we get them, and we'll deal with them then. But for now, what I'd really love to do is to get a little bit of a background story from each of you, and just understanding that, you know, like we all come from different backgrounds. We all haven't been doing what we do today for having a day. I kind of feel like I might have been, but I mean, it's not the same for everyone. Get a bit of a background, understanding yourselves, where you come from, how long you've been doing what you're doing, and then we'll work through other bits and pieces there. So Victoria, I might pass to you on my screen. You're next on my my circle. So Vic,
yeah, I'm the next one. So lucky number one. Pete, morning everyone. Lovely to be here. I was excited and then I saw it was all like girl power today. So you're a very lucky guy today, Pete. For those of you,
it's good to be the king, they say.
King of the angels. Well, morning everyone. I'm sure a lot of you already know who I am. I'm the CEO of Credit Fix Solutions and Director of Credit Fix Lawyers. For those of you who don't know me, I've been in the finance industry for a very, very long time. About 20 years now. So I used to be a broker. And then after that, I just found it really hard. I mean, kudos to all the brokers out there. When all the re-regulations started, I was like, okay, I'm out. But then I jumped into credit reporting and credit repair. So I started Credit Fix Solutions about 6 years ago now, isn't it, Pete? It's been a while.
Must be, yeah.
Yeah, just helping brokers with their credit reporting education, trying to improve credit reports so they can get their clients better interest rates, pretty much.
And I guess there's a lot happening in that space too with, well, not just the open banking piece, which will have an interplay, but also with comprehensive credit reporting and so on as well. So it's important space. And what you say, you've been in the finance industry 20 years, so what, that makes you 22 then?
Yeah, 23 next week.
23.
Yeah, I've got a few nice. No, I'm kidding.
Very good. So Donnie, over to you. Give us a little bit about the Donnie story as your journey. The journeys are all important in life. and what you're doing these days.
Absolutely. Thanks, Pete. And morning, ladies, and morning, everyone that's watching and joined in for this morning's Q&A. Pete, my background started in telco, funnily enough, back in Tassie. And so had 7 or 8 years in telco. And then when I moved to the Gold Coast is when I started my journey in finance. So I've been in the game for 15 years and always in the alternate lending industry. So never mainstream, always alternate. And yeah, started my new journey as head of third party with Lend in January this year. And the main reason for that was very happy where I was, but I'm very passionate about our broker industry. And I'm really, really confident and happy with this platform we've got. So hence why I'm here at Lend looking after all our brokers and lender partners.
Excellent, excellent. So that's interesting because I must admit I have a huge passion for alternative or non-banking sector, although back, unfortunately, I'll call it back in the 70s, I cut my teeth in mainstream banking. In 1993, I set up Rams Home Loans first sales office, and ever since that day, my journey has always been there supporting alternative forms and the non-banking forms of lending in this country. So that's excellent. I was going to go to Michelle, but it looks like her camera's dropped out. You still there, Michelle?
I am. I don't know why my camera's dropped out. I've been trying to fool around with it. Sorry. I noticed everyone had frozen, so I tried to fix the problem because I didn't like the still that I got caught on.
You give me your little story, Michelle.
Yeah, so hello everyone for a start. I've been in the industry, the finance industry or credit industry since I left school, but probably more so in BDM roles probably since the early 2000s. So I was a broker in the 90s, around when it was all kicking off. But I chose to go back into working with finance institutions. So I've come from being a lender BDM predominantly, and I've been working with AAMC nearly 11 years. So quite a long time, but I really enjoy my role, and it's changed immensely since I first started working here. So I pretty much now oversee most of the functions of the business in Australia. But yeah, I been here a long time, so I've seen a lot of change.
Yeah, there has been a lot of change, hasn't there? And that's great because I guess being in the education space and training space in our industry, you've got that depth of knowledge over a long period of time from practically working within the industry that's obviously carried with you to be of a huge benefit in what you do now. You do realise that when you switch your camera on, you've really screwed up my order of things on the screen now, but I'll fix that as I go.
Sorry.
That's okay, you're messing with me. Gabrielle, over to you. Give us a little understanding of your journey.
Yes, certainly. So I've been in the finance industry a few more years that I am willing to share because it's my whole career.
Oh, come on, we're all friends and family here. It's only us 5, no one else.
Very long time. And the first half of it pretty much was at one of the big 4. And so there, like most people in banking, I got like amazing opportunities to try out a whole lot of different roles. Predominantly though, they were in the insurance side and the lending side. So I ended up sort of running one of their call centres that was insurance and lending. And back in 2003, I was the first employee for ALI Group. So a bunch of people from Westpac realised that broker clients often didn't get the opportunity to take out any protection because the banks were offering products, but the brokers didn't have anything that they could do. So ALI was started back then. I was employee 0, and I'm really pleased to say that whatever it is now, 17 years later, with a team of 50 BDMs and thousands of brokers who can now offer protection to their clients. So it's been a really journey.
Yeah, that's great. I agree with you. Some of those foundations that we lay very early on in our careers, and although I take a slap at the banks on a regular basis, I mean they deserve it in my books, but that's all right. I would never change that for quids. I can remember sitting down in one of the major 4s of my first job in the 70s, and they gave me 3 books, each were about this thick each that I had to read. bugger that. I just got onto the counter and started serving clients and learned as I went. But they're all great foundations. Vic, weren't you at one stage, did you work with one of the finance companies, not around anymore, but in the past? Did you have a finance company background somewhere?
No, it was always Westpac.
No, to Victoria. No, to Victoria. Sorry.
To me, yeah, I worked for a mortgage originator. So
did you work in a finance company though at one stage?
Finance company?
Yeah.
Yes, not a bank though. But
no, a finance company. Yeah.
Yeah, mortgage broker. So I had a DLA of $1 million. I was 22 years old and signing off on, $500,000 95% lens.
That's another discussion for another day, I think. Okay. All right. No. Okay. Good. Yeah. But again, coming back to our conversation, Gabrielle, is that those foundations that we build very early on in our careers line us up for what we do as our journey progresses into the future. And regardless of where we land in the future, I think these things are they're the solid foundations that we build upon, and it's so important to everybody's journey. And I'm always, and none of us have had this discussion before, so this is just a cold conversation. I love learning more about people's journey and understanding the enormous skills and knowledge we have within people in our industry that we may or may not talk to every day, but we tend to see, most of us all the time. But that depth of knowledge and experience, I think, is incredibly important, especially when we're having these conversations, because I'm asking you to answer some questions, and you guys have got the knowledge, ladies, sorry, got the knowledge to nail all this. It's fantastic. So lovely to have you all with us. I wanted to give you all a quick 1 to 2 minute opportunity for an elevator pitch on business. And we'll do that quickly and then we can get on to some other stuff. So Vic, do you want to just give us a quick pitch on what Credit Fix Solutions is all about and what is the key things that you're helping brokers with?
Well, like the sign says, we don't charge unless we can successfully improve a credit report. So for brokers out there who haven't used our services, we do give a small commission for any application that we start work on. So it's a great little side income stream for you. But also, very trustworthy. We're also now a law firm. We can fix up most credit reports in about 4 to 8 weeks. We're very, very honest because we're not going to spend, like brokers, you're not going to spend 10 hours and 8 weeks on trying to get a loan across the line if somebody simply doesn't service. It's the same for us. Yeah. We're just not wasting our time or the broker's time or the client's time. Like if they need to write, the fantastic Peppers and the Liberties, all the rest of it, well then, so be it. So yeah, you can trust us and use us as an add-on service.
Excellent. Yeah. Donnie.
Thanks, Pete. Look, for me, it's about the platform. It's a technology platform at Lend that, really makes life a lot simpler for business finance brokers. So it's a commercial-only platform. There's no consumer lending or products available on the platform. It's one application form to give you access to 25 lenders, one set of bank statements. It's a free platform, so there's no charge to our broker family.
We like free.
And we actually pass on 100% of the commission to our brokers. So it's certainly a different model. Real-time status updates, a broker support team to make sure that we support our brokers to keep our lenders accountable for applications that are in the system. For me, it's great because I get to now work with our lender partners, our broker family, our affiliates. And it really is a fabulous platform that matches a broker to a lender for their client within sort of 30 seconds.
Nice. Excellent. Gabrielle.
So one of the things that COVID has shown us all recently is that most of us, most Australian, most borrowers do not have a financial situation where they can cope with the loss of income for a period of time. So in this situation, whereas everyone, the government stepped in and they're helping, but if something happens to somebody, for example, they get seriously ill, and unfortunately, we see more claims for cancer than I'd like to talk about. Those people, they're at risk of losing their homes if they don't have some protection in place. So our brokers have got this great opportunity to have a conversation with their customers about what's your plan B. Have you got something in place that will make sure that if something goes wrong, you're going to be able to financially afford to continue with your loan repayments, pay your bills, and focus on getting better? So the way we see it is that the benefit we provide is that brokers can change someone's life, like significantly make a really positive difference.
Excellent. And look, cancer is such a bastard thing. It doesn't discriminate against anyone. It is a real heartache for everybody, anyone who gets caught with that. And although, you know, it's not the same case, but my specialist this week took his scalpel to 1, 2, 3, and another one here, 4 parts on me, and you know, and it just, I do this every year sort of thing, but this year's the worst. But yeah, it just doesn't discriminate. It's a really nasty, sinister thing that we've got to deal with, unfortunately. Although I'm not going to enjoy my conversation next week, she's now got to refer me to a plastic surgeon, which I'm not happy about. Maybe I'll get a facelift. A bit of a tuck under there, it'd be good. Yeah, well, it could be the go.
You don't need one.
Well, what do you reckon this is about? Hiding some of the COVID excess. All right, thanks, Gabrielle. Michelle, now, a little background AAMC. I've been with the FBAA now just over 17 years. So initially I was New South Wales State President and blah, blah, blah. And AAMC was supporting the FBAA before I even got on board. So, you know, we have a lot of love and friendship with AAMC, and you guys have weathered the storm of many others who have fallen before you. And so give us a bit of the AAMC pitch. You're wonderful people.
Oh, thank you, Peter. Yeah, look, we've had to, due to COVID, make some big changes to our business too. So since March up until now, we've sort of actively had to do away with face-to-face training. So we were, you know, actively trying to support that in most states. So we've gone fully online with virtual classrooms. So, and that's been very successful so far because it allows us to deliver training where we weren't able to before, and that's both onshore and offshore. So we're supporting some businesses that have got support staff in other countries as well with training, and we're able to bring them in with the Australian cohort or the people that we're getting here. So that's pretty amazing, and it actually provides a pretty diverse group of students. So they are able to, you know, chat amongst each other. It's not a webinar style in any means. We do it via Zoom, and it's an open classroom, so they feel like that, you know, just like we're doing today, they're able to talk and you know, amongst each other and with the trainer quite interactively. So yeah, we are seeing quite a good uptake with that. And in fact, we had one fill up this month, so we had to create another one for July. So you know, so we seem to be doing, all my trainers are doing a good job with it, I hope, based on the numbers that we're seeing. We're still obviously, you know, a lot of people still prefer to study online, and those numbers are still quite high compared to our virtual classroom, but we're hoping more people will come to the classroom and they'll see benefit in it. It's not that much more expensive, and I would urge anybody coming to us new to do their study or existing brokers looking to upgrade their diploma, jump onto the virtual classrooms, because you will have a lot of fun and you'll learn a lot in the process. So yeah,
excellent. So
I think everybody in your audience knows what we do. We do Cert 4 and diploma. So yeah. Yeah.
And you do a lot more than that. There's business management courses. There's a whole range of things that are available there. But listen, those things you're mentioning, are those things that you did specially because of the impact of COVID, the way you reshaped that virtual classroom as such? Is that a special initiative from there? And has it gone okay? Oh, you've said you filled one lot already, and
yeah, well, for this month. The other thing is too, we have an app, and our app allows you to pick up your iPad and go and read in another room, and you can do it if your internet falls down. So you can actually download your learner guide and still continue to read without any internet. And we've had to, you know, those things were always on the back burner, but they never, they didn't take importance until we were faced with a crisis where we had to actually start to get those things, you know, active and up and running, because we were unable to send learner guides out to people as well because the courier companies were so overloaded. We were just not able to get our, you know, those things out to our students. So yeah, we have been impacted quite substantially, but it's good. We're actually, it's been positive for us.
Isn't it interesting how the dynamic of something that is quite disastrous can have positive outflows and so on. So what about you, Gabrielle? What did that sort of positive outflow from a really disastrous sort of situation with COVID-19 play out within ALI? Was there anything different you did there, or?
We have done a similar thing, and I've got to say, so we've recently revised our product, and we had to train all of our brokers on the new product. So we developed an online training module, and the BDM supported that by Zoom training. So what we found was that it was really effective, in fact, and the fact that we could have one-on-one and group training via Zoom, and we had so many people to get through. I think we actually did it better by doing it in this environment than we would otherwise have done. So from our perspective, it's actually had a positive impact, and we've just had more people protected than we usually do. So there was definitely a silver lining at ALI.
Yeah, I know how that feels. I was saying to somebody the other day, I said, with doing everything by webinar or Zoom, whatever, I've not had so much interaction with politicians over the last couple of months, what I normally do over a year, because they're all on Zoom meetings. There's no travel drag or anything like that. It's so much more efficient and effective. It's interesting, isn't it? So, Donnie, how about in Lend? Has it changed? Has COVID changed anything for you guys, or is your digital platform enabled you just to keep carrying through?
Yeah, Peter, good question. Obviously, the volume of deals that have been settled during COVID has decreased, definitely. But what we found is, you know, we always talk about the word diversify, and now that word has sort of changed into the buzzword of pivot, we are actually finding that a lot of brokers are starting to pivot their business. You know, whether they're tired, you know, from dealing with hardship claims for the last 3 months, and now they're really looking to move and shift the focus of their business a little bit. So I think now the new word will be, you know, pivot or die instead of diversify or die. So we've found that we've been really busy, and you're right, you know, for me, there's always been, you know, you're in an Uber or you're on a plane and you have that bit of downtime to do your emails and work through stuff. And now you're looking at yourself 7 hours a day in front of a webinar or a Zoom camera. So it really is a different prospect. And you're right, it's certainly more time efficient, but you know, you're on 7 or 8 hours a day instead of maybe 2 or 3 hours a day. And for us, for our brokers too, Pete, the lenders, you know, our lender partners are amazing, and we've been able to, fortunately, you know, our dev team's onshore, they're in Melbourne, and we've got 10 developers who work on the platform. So they've had to change criteria in our platform sometimes 5, 6, 7 times a day as lenders shift industry, you know, industry inclusions or exclusions, or bringing industries back in, you know, extending trading length and then reducing it back. So we've been really fortunate that we've been able to react so quickly to make sure that even though the choice may have been different for the last 3 months, the choice is still there and it's been accurately put out to the brokers.
Yeah, excellent. Excellent. And what about you, Vic, in the credit repair space? Yeah, one of the things that I've actually got an email on, which has got nothing to do with this conversation, but is relevant, and without, you know, giving it all away, but there are concerns amongst some of the lenders that those that have been on stimulus packages, once they come out or are trying to do something now, that lenders are looking at it as a credit default. That could be a rather problematic thing, because the government came out, and so did the ABA come out, saying that yeah, if you're on a stimulus, it doesn't create a default, and it doesn't create a default because of the mechanical or the digital journey it's on through their system. So it's not actually showing as arrears, and it doesn't become a default because it doesn't go down that particular path. It's on a different path, so there's no triggers. But I'm hearing that some lenders may be taking a different view. I don't know if you've heard of that, but I dare say there's some business coming your way somewhere. But how you guys gone through COVID, and have you heard anything about that?
It's so busy. We're actually busier now than we ever have been. And we did a pivot as well, Donnie. So moving into COVID, you know, we suddenly weren't going out and doing coffees. We weren't going out seeing brokers. Our workshopping, all of that stopped. So it was a big question mark on, well, how do we re-engage and connect with referral partners, both existing and new? So it was literally just jump on the phone. So BDMs across the country, our scenarios team here in Sydney, it was just phone call after phone call. And what that's done is it's helped get us back reconnected with brokers. And I mean, I'm sure there are brokers who don't really go to events anyway, so maybe we weren't really reaching out to them. Do you know what I mean? So whereas now we're on the phones and now our phones don't stop ringing.
Yeah, that's also a really common conversation, Vic. The amount of people, we did a seminar the other week with Tom Panos, a real estate guru, and he's a bit of a rah-rah guy. I might be getting a little old for that, but somebody on that turned around and said, you know, when COVID hit, the first thing I did, I picked up the phone, rang all my existing clients, and I haven't been this busy for 2 years. It's the same story you're telling. It's remarkable, and those that are complaining are probably because they haven't done anything. But there's a great outcome. Sorry, I cut in on what you were saying.
Pivot or die. And like you were mentioning before about the credit reports and the, I think you're kind of referring to repayment history information, because that's what we're seeing a lot more of. And brokers are coming to us and saying, look, these clients don't have any defaults, but there's 4 months of 1 or 2 months arrears against one of their 24-month repayment history information. Can you fix it? And the good news is that we can. It does get amended to either an R or a 0 even. And yeah, of course, lenders, you know, next year they're going to see a bunch of R's recorded for 2020. They're probably going to go, okay,
what's an R or a 0 for the dummy?
R is for, sorry, I'm in my headspace too much sometimes. I know it all too, so I've been doing it too long. So R is for not reported.
Okay.
So it doesn't affect the credit score. So when you've got a 1 or a 2 on, you know, 1 month's listings on your report, that's pulling down the credit score and affecting the summary and affecting the credit worthiness of that customer. So if you can get those amended to an R for not reported or a 0, the score jumps up because the R's and the 0s don't affect the score. So that's what you're looking at doing. So moving forward, yes, lenders are going to see R's and go, okay, that's probably COVID, but they can't pinpoint it onto COVID or onto financial hardship. Just means not reported.
Geez, it's become very scientific, hasn't it? There's a real science to all this.
Credit reports, you know, sometimes you've got one credit report that's fine, and then you've got a court action on another credit report, and then getting all 3 amended. You know, at the moment it's taking 2 months to amend a credit report. So you've got people who've put deposits on properties, plus lenders are taking God knows how long to do pre-approvals. Most brokers sometimes with credit repair on top, they're looking at a 3 or 4 month, you know, process before they can even get an approval. And
then when you got some rat bag lenders are taking 40, 50 days to pick up a file. They go, geez,
what is that?
Want to make it hard. Bloody hell. And you know, and the reason why I like, and the reason why I actually started that Q&A with Whitey, and the reason why I have these conversations is, you know, the stress upon brokers with all these unknown things that are happening around them, and they're all happening at different speeds. And like I said, with the credit repair, I can go back, you know, decades in this game. It used to be a pretty easy gig to understand what's going on. Today it's just another league again, just to try and get through the, not just the science of what's happening, but then how do you fix the issues as you go forward. And it concerns me greatly from, you know, brokers' mental health space. And, you know, like I started the conversation on mental health in this industry back in 2016 because it was a real taboo subject. You know, people are suffering from depression or anxieties, whatever. You just didn't speak about that. And when I saw some things going on corporately in the world that was just wrong and inappropriate, is when I stepped in. And I'm really glad where that journey's gone to, that we can have these conversations. Yes, it helps answers questions, but also helps people in their mental health space. So, okay, I can now start to get my head around this, or I just heard somebody speak who has just got the wealth of knowledge on whatever it is where my anxiety's at. I need to speak to them. And that's a fundamental of what we're doing. And it's also glad I've got a message here from a guy in Perth and he's just saying he saw a big "Are You OK" Day sign on the back of the bus, and obviously our first thing we backed from 2016 was "Are You OK" Day, and he said he felt so good about the initiative and the involvement that the FBAA's had in that, and seeing it countrywide, which is really heartwarming from my point of view. But as a special part of what we do with these Q&A sessions is to help relieve that. What I want to do, I've got some other questions here, but I want to ask, there's some specific questions that have come through for certain people. So I'll probably ask those now and make sure I don't miss them. So the first one, Donnie, is to you at Len. I'll be interested in your response to this, and I respect your intellectual property, and so you can move on from it. No, I'll ask the question. It's up to you how or if you want to answer it. And so the question is, Donnie, thanks for the info. How does Len make their money, given you pass on all the commission?
Great question, and more than happy to answer it, Pete. And you know, every single webinar or demo I do, I get asked this question, and I'm more than happy to share. So
now I don't feel so bad about asking.
No, don't feel bad. You know me, Pete, open book. So for us, we make our money on volume. It's as simple as that. So we have agreements with our lenders, and we are rewarded on volume that is transacted through the platform. And again, because we're very strong technology based, our overheads are very different to a lot of other organisations, and so that is why we can afford to pass on the full commissions and to be able to survive through volume.
Very good, fair call. One for you, Michelle at AAMC there. Can we access compliance packs from AAMC to use when we are not under the guidelines of an aggregator?
Okay, so I'm not sure.
So the
what
FBAA, we have a compliance, we have those compliance docs we got through the FBAA.
Yep.
So I guess in part that's open for people to use, wouldn't it? You got to be an FBAA member, so if you're not, time to become one. I've got to get the plug in too. But yeah, so there's that, isn't there, Michelle?
Yeah, there is that. But we always we ask them to go through you, so that we know that obviously they've renewed their membership or that they've joined with you. So I guess that in relation to standalone documents and modules, yes, we've got plenty. So, and some of those have templates in them. A lot are based on guidance. So, but you can complete anything with us at any time if you want to come and have a look at our catalogue of various courses. So
there you go. Dive into AAMC's website.
Yeah.
Or ring. No, I was going to give your phone number out. I won't do that.
So, yeah, well, I do actually return calls, or I'll actually get back to the person and let them know who else to call in the business. So, but it is preferable to call the main line.
Yeah, so. No, that's fine. I was only playing with you. I played with one of our directors this morning. Now I've got to go and apologise later. Didn't play out the way I thought. Really, you get that. Back to you, Vic. Two questions here. One is, and I'll be cautious how I ask this because I don't want to name various companies involved. And I think this person needs to reach out to you direct, but they have a client with a court action with a certain finance company. They've been advised they won't sign paperwork with you though, so not able to proceed. Is there any way around this, Vic? I think they need to reach out to you direct on that.
Yeah, I think shoot me an email to Victoria at creditfixsolutions.com.au, and we can go from there. But there is another avenue that legally your client can take. So if a plaintiff on the other side refuses to sign, there are other avenues. So we can discuss them.
Is that why there's now, what is it, Credit Fix Lawyers?
Credit Fix Lawyers, yeah. Yeah.
Okay, so
we're a law firm. We can legally give you advice just on credit reporting. Don't ask me about divorce or family law. Not going there. Yeah.
Yeah, I'm not asking about that. I've done it 3 times. I don't need any more of that.
Yeah, I could. Yeah, I'm the same. I could totally advise you 4 years of my life, but credit reporting.
Life is hard. I'm only actually 30. Look at all this grey hair. It's not good.
Yeah,
and the other. The other question for you, Vic, was what is the cost of credit repair? Is it a variable? I mean, I know you've got on the banner says no result, no fee.
Yeah. Well, we're looking at about 4 to 8 weeks to remove any listings from a report. If we're working on defaults or court actions, right, through our law firm, then what we say is we kind of gauged how many hours we're putting into a file. As default court actions get bigger, sometimes the workload or the court costs, etc., can escalate. So we kind of put it into brackets, a bit like how with brokers you get paid more if it's a larger loan or multiple loans. So for one listing, we've tried to keep our basic removal fee as low as possible. So a default up to $5,000 is $1,500 if we can get it removed. So the client pays $500 once the lender comes back and says, yes, as per your written legal arguments, we agree to remove the default. Then about a week or two later, we get the cleared report back to the broker and the client pays $1,000. But you do get complex files, but we've got payment plans up to 24 months.
Oh, there you go. And none of that's unreasonable. I mean, no one's a charity, and we all have our business model. That's great. That's great.
Yeah, but thanks for the plug, whoever that was. We're all getting plugs in today.
Well, look, it's, you know what it is? It's important that people understand, and the reason why I love these questions, I know sometimes I get a little bit granular on things, but it's none of you are prepped for these questions. Anybody who joins me on Q&A with Whitey, I don't give them the questions in advance. This is your knowledge and your experience and skills just shining through. That's why I love doing this. It's great. I did want to ask Donnie and Gabrielle your views on the best interest duty. And I know, Gabrielle, it's not necessarily, well, it's actually not necessarily in either of your brackets because it revolves around consumer debt. But Gabrielle, do you have a view on it? Because I actually can see a piece from ALI's position that plays into this conversation.
I mean, legally, we are not part of it, but from the spirit of what they're trying to achieve and doing things that are in the best interest of the borrower, then it makes logical sense to say to them, what's plan B? Because your situation today might be different from your situation in 12 or 18 months. And we wanted you not only to buy this house or to refinance it, but to keep it. So the way we see it is it's complementary to it's in the best interest of the customer for them to have this conversation and then to make an informed decision, like what is my plan? How am I going to look after myself if something goes wrong? So we see it as complementary, even though legally it isn't part of it.
Yeah, I completely agree. And again, reinstating, your offerings are not in any way, shape or form a part of the best interest duty. But I remember I did a video with you I think it was a couple of years ago. We used to play at various functions, but I've always been a strong advocate for this. And if we look at the UK model, over 55%, and it's growing, of all mortgages have a similar style of insurance product attached to it to look after the borrowers. It's a commonplace exercise, and it's difficult in Australia because some of the consumer credit products that were in the car industry and so on got slammed by ASIC and taken out. That's not the same thing, that's different. But to me, my greatest worry is, and it was before, but it's even heightened now under best interest duty, is if something goes wrong in the future for a borrower, and the first thing they're going to do is put their back's getting pushed against walls, they're going to blame everybody else, regardless of what's right, wrong, or indifferent. This is just how human nature works. They're going to start blaming the broker. It's the broker's fault. You're going to get an ambulance chasing solicitor goes, oh, best interest duty. I'm sure you bruised it somewhere. This isn't a part of it, but did you act in the best interest of your client in offering this style of product or insurance product so that if something happened to one of the borrowers and they had a life event, a partner died or became permanently incapacitated or whatever it was, there was a sum of money that would help protect them. Oh, Mr. or Mrs. Broker, you didn't offer that. You didn't act in the interest of your client, did you? You're dead in the water. So I think it's really important that everybody has that conversation around the style of product that ALI offer, and it's up to the client to accept or reject it and just take a note as to, the client decided not to go ahead with it or what. But I think it's very, very important that you all consider this style of additional serviceable product for mortgage borrowers in the country, because my gut says there's going to be a play out the back end of this. It isn't going to be friendly.
Absolutely right. One of our regional brokers told us that she got a call from the local solicitor saying, do you realise that Mr. So-and-so has passed away and you've got an obligation, now we're not, you know, whether it's legal or moral, but you've got an obligation to have a conversation with him. Did you do it? And what's built into our system is an email that if the client doesn't choose to go ahead, it says, thank you for considering, you've decided not to take this. If you change your mind, please come back to us. And the broker can store a copy. So she had a copy of that. She sent it to the solicitor, and you know, she had done her part. She had the conversation. The client in that case chose not to take it, but that's it. It was gone. You know, she didn't feel either morally bad because she hadn't discussed it, but also whatever legal implications may or may not be there, she had evidence. She had a discussion. The customer made a choice, and so you're right. I think it goes hand in hand.
Yeah, therein lies the key. Make sure you got the proof. It's the same with everything under best interest duty. When we push the questions back to ASIC, well, how do we evidence that a broker has complied with the best interest duty? But it all comes around document. Have you ever experienced? Donnie, what are your views on the best interest duty? Again, I know it doesn't impact the business or commercial space as such. Well, there is a little bit of overlap in business depending on the structure, but principally it's not in your area. But what are your thoughts on it? You know what's going on with this.
I do watch it and do, keep myself informed, because as per everything we see, in the commercial space, regardless of how long it takes to trickle through, it will trickle through. We talk about commercial lending, not being regulated. That will happen in time as well. So best interest duty is something that's really important for us. We actually see it that, platforms like ours and our competitors that are out there, we're already trying to support our brokers by giving them choice on the platform to be able to give to their clients. So rather than being pigeonholed into certain situations, and we know that we will need to and are working on in the background something that actually will support and protect the broker when actually working a commercial deal, even though it's not required, it's not part of our our side of the industry. We think the more that you can be on the front foot, the better it is.
Yeah, and I think that regulatory piece will play out. I don't believe it will ever come under the NCCP. That would be a very wrong outcome. And it is currently, that form of lending is currently governed under ASIC law as well, and incorporates, but it will flesh out further. You're right, it's going to evolve as everything evolves. So thanks for that. I got a question asked of me. It says, please explain the poster over your shoulder. Are you a Trekkie? So if you can see that, it's actually the poster from Star Trek for Into Darkness. A great movie. That's Star Trek. Yes, that's Into Darkness. Yes, I don't know if I call myself a Trekkie, but I'm a huge Star Trek and science fiction fan. We'll give a little personal stuff away here. Upstairs the other year, my wife bought for me for my birthday is a full-size Star Trek Enterprise edition of a Klingon Bat'leth, and it's full-size. Don't touch the point, it'll cut right through you, sort of stuff. So don't break into this.
Where'd you keep that?
Upstairs, hidden. Well, I won't say hidden away, but it's displayed upstairs. But it's a full-on Bat'leth. So if you know your Star Trek, that's a formidable weapon by the Klingons, and maybe I am a Trekkie. Anyhow, maybe not as much as I used to. I used to have the full collection of the entire TV series around Deep Space Nine, Voyager, Next Gen, all that sort of stuff. One of my bloody ex-wives took it from me. So I have nothing left except my current movie collection. So anyhow, bad on you women. Bad. No, it probably teaches me to be an asshole, but anyhow, we'll move on from that real quick. I do. One thing I do have, we talked about plugs before, one for AAMC. I've got Todd has come in. He just wants to say, I have used AAMC for years, and only last month I jumped online and completed the AAMC refresher course for AML, one of ours beauties, and just wanted to let other brokers know how easy and efficient the AAMC online system is. There you go, free plug.
Wonderful, thank you.
Somebody who's watching now, so very good, very good. It doesn't hurt. Oh dear, I've now got a state manager in Western Australia who's a Star Trek fan too. Well, we'll sort it out later. All right, what other questions we got here? Let's, hang on, my screen's shifted on me. I think that might be what I'm interested to understand. I have several questions here talking about clawbacks and the impact of bid around that, and then verification of identification digitally. Now, they all have different slants for all of you, I guess, somewhere. I know from clawbacks, my view has been for forever and a day, clawbacks shouldn't exist. I think they're the most incredibly wrong and horrific thing in our industry, unless you break the law. So if you haven't broken the law, if you've not committed fraud, you've not breached your agreements, then you shouldn't apply. But if you've done those things, then you own it. You commit fraud, you break your agreement, you own the penalties of it. But the thing we tend to forget is that clawback was introduced to this country to stop churning of portfolios, not movement of single deals. It was portfolio movement. And it's gravitated from that into being about each transaction. And to me, that is incredibly wrong. Brokers spend a lot of time, which costs a lot of money, and they employ staff, rent premises, phones, all the stuff that goes with it to find a client, get them through the process, settle it and do their job. And then they only get half their pay anyhow, because the other half is trail. And that was done just to ease the economies of things from the lender's end. So to me, trail is just a terrible, terrible thing and needs to go. We put that in our submission to Treasury and ASIC, and we've been saying it for a long time to the politicians. I know they really don't want to hear it. One of the questions asked me is we're actually looking at engaging a research house. And unfortunately, COVID-19 has impacted the progress of this, but to do a research piece on clawbacks in other industries and other sectors, both here. I already have the information on a global basis for broker sectors around the world through the federation that I chair. So we've got that piece, but we're going to look at other industries, because my last meeting with Treasury, which I had a couple of very senior politicians at the table, when I brought it up again, they just looked at me and said, it ain't happening. Lucky it's only 2 years. It could be 5, 10 or 15 like other places. And they're going, you obviously got a bit of a thorn in your claw on this. I'll let it go, but I don't know of any industry that's got a clawback on money they've been paid for like 5, 10 years. But anyhow, we're going to research that piece. That's what the FBAA is going to do. But on the VOI piece digitally, how is that working in your particular industries, or is it not business as usual for yourselves? So Vic, is in the credit repair space for verification of identification done digitally?
Verification.
Yeah, ID.
ID. We don't have to ID because we're not regulated. So it's really just making sure that we're covered as per the Privacy Act when we're collecting personal data. So we have a lawyer that jumps in every 6 to 12 months and double checks our privacy consent agreement, which is now 3 pages long. Thank you very much, legislation. But yeah, we just make sure, it's all covered in there when we're collecting their data.
Can you sign that form digitally though?
Yeah, you can.
You can sign digitally. Well, there you go. There's the move. I mean, I think this is one of the things COVID has done, is one of those other positive aspects in a dark moment, is signing things digitally, whereas historically everything was signed in wet ink, which can be quite cumbersome, especially when we had.
About that yesterday. Like when I started, I actually have to go and physically see my client, sit down, fill in the application form and get them to sign. Whereas now it's 2 minutes. They get it on their phone. They can sign with their finger, touch screen, and we've got an application.
Yeah,
brilliant.
One broker was telling me how it's just expanded his business phenomenally. He said he wasn't dealing with clients in other states. He was referring them to other brokers, and now he can. So, I think it's had a very big positive impact for a lot of brokers.
Yeah, very much, Michelle. Does it impact your business at all? Digital signatures, or not really?
We always accepted them. So
I always accepted them. There you go. Ahead of the times.
We've been doing digital signatures for some time now. Where it has impacted us, we have funding in Victoria, so we have state funding, and a lot of that was very cumbersome and archaic, but they've changed their views. Vic's Skills have changed their view on how that all needs to be done now under the COVID changes.
What about,
So,
Donnie, how about you in your space? Has that digital signature VOI had any impact or anything, or not?
Look, I think, you know, in the business loan space, Peter, it's been digital for a long time, you know, signing contracts, etc. But where it has impacted probably on our side of the business is for our private lenders. So, you know, a great mate of yours and Vic's and, you know, Cam from Strive, one of their big things was that he would be on a plane the next day to, you know, sign up contracts and he could get money to people within 24 hours. So obviously that's stopped and it's delayed, and, you know, mortgage documents need to be signed and posted and verified, and lawyer meetings. And so, look, you know, in a typical unsecured invoice factoring, you know, that type of cash flow space, nothing has really changed at all as far as that's concerned. They've been doing it for a long time. But certainly in the private lending space, it's definitely caused people to, one, need to extend their service terms just that little bit, and secondly, you know, make sure that they are implementing quickly all of the ways that are available. And there certainly is some really quick products that have been brought out as far as, you know, ID, that have been around for a while that people may be hesitant to bring on board, which a lot of people are doing now.
So they're stepping up.
I think we're lucky.
Yeah, okay. What about you, Gabrielle? Does it have an impact from yourselves there at ALI?
Yes and no. So we haven't required signatures for a very long time, so it hasn't affected our own business. But what it has done is it's changed broker behaviours. So brokers are not seeing their customers face to face. And a risk conversation has traditionally been one that's very, you know, warm and emotional, and I need to look you in the eye and have a personal conversation versus do something via email. So we're working with brokers on how to adapt that process if they're not seeing people face to face, to have this conversation via Zoom or via phone call, and not to try and do it by an email, because we know we're all inundated with emails. We don't read them properly. We don't click on links. And so for us, it's really adapting our process for brokers so it fits into what their new normal is.
Okay, excellent, excellent. I got over it. Yes, I did. I've got another comment just come here. There's a question from somebody who said, should clawbacks be abolished? And I guess that's directed at my previous comments. And my answer to that is actually no. Clawbacks need to stay as a penalty, if you like, if you breach your agreement, commit fraud, all that sort of nasty stuff. Otherwise, if a life events happen, clawback should not apply. You did your job. Right? And if a loan terminates early, you still don't get all the money that you owed at day one, because the trial never played out full time. So as far as I'm concerned, clawback should not apply on a life event. It should only apply if you breach your agreement or breach laws. So I don't think abolishing them is the right move. But our position, this has been our position from day one, is that, you know, it's just criminally wrong as far as I'm concerned. I mean, you think about it, Vic, if you did your job on a credit repair, you got paid your money, and 4 months later somebody said, oh, yeah, I think you could have done better, I want my money back. Yeah. Same with lends.
Like the job's been done.
Double AAMC.
But why is it so hard to add in something to legislation like a clause? You know, like section 20.5 clause A, if there's a life event, clawback, you know, isn't payable. I don't understand why it's so hard.
Yeah, I know. Neither do I, be honest with you. Although writing things into law is always difficult on a good day, let alone when it's something that people are against doing. But I think there's an evolutionary piece in this as well. So I don't know if we'll have the concept of law change, but I think we will, with time, influence a great decision. So I think the best interest duty certainly does bring a renewed focus into this, which we've been talking out from day one since the whole best interest duty discussion happened. There was an obvious problem and challenge with clawbacks and loans terminating early, and doing the right thing by the client, because it may be that you set somebody in a loan, you know, 13 months ago, the market's moved, and now it's in the best interest of the client to take them from there to there, financially, interest rate wise, whatever it is. yet under the clawback arrangements, you're going to lose everything that you'd earned for doing the first job, and now you're going to do another job basically for nothing. Just there's no commercial sense to it whatsoever. Anyhow, I'll probably labour that point, and I see I'm getting short on time. Mariah in the background will get very upset with me soon. One last thing I want to comment on, I'll be interested in your views on this. Are you across the 25,000 home builders grant at all? I know it doesn't apply to some of you, but I've got a whole host of questions around there. One says, what is the FBAA doing to get the grant? Oh, we're not going for the grant, but I know what they mean. We sent an email out yesterday with an update on the latest on what the grant's all about and how that applies. One of the great frustrations for people, although it's a federal initiative, is up to the states to implement, and then in conjunction with the lenders. But I think that's slowly rolling out. I think it's one of these things, and my frustration at times with politicians is that it's a bit like some of the SME stimulus, that you get $250,000 unsecured, yet a lot of small business people didn't want more debt. They wanted to restructure what they had, and they couldn't. And so go, you sort of missed the mark on that. With this 25 grand on renovations and new builds, well, yeah, if you're going to spend 150 grand on a renovation, that's one bloody big renovation going on somewhere. And then you've got LVR caps, you've got caps on incomes and so on.
I looked into it.
You sort of go, why don't you consult with people? It's just not like they don't know us. You could easily get a quick table together and say, does the maths of this make sense? And my greatest concern is they all sound great, but they all seem to miss the mark. So Vic, what's your thoughts? That's my thoughts. I might be wrong.
I just think, if people it's only going to apply to people who are already doing it. They're about to do a huge add-on granny flat or whatever they're doing. They fit the criteria, they'll get 25,000. But you have to put in the rest of the money yourself. So it's not like it's matching 25 to 25 or 50 to 50. You've got to come up with all that money. If you haven't got it, you're not going to have it for another, 6 to 12 months, however long it takes you to save it up. Is it still going to even be around then?
Well, and you've only got a short period of time. This isn't here forever. It's challenging. What about you, Donnie? You got any thoughts on that?
Yeah, look, I agree with Vic. I think the restrictions around what it is, it feels a very, very small bucket of people who will be actually able to access it. And again, it's all, reactionary rather than responding. And I think that, through our trade and our apprentices and, issues with unemployment, that, again, there could have been a much better program developed to, help people renovate kitchens and bathrooms in certain areas where certain, labour hire companies or construction companies, etc., are engaged to be able to then increase their employment and really have an effect where it's probably most needed. And, even though we're dealing with COVID, we're off the back of a terrible bushfire season. And there are a lot of people who haven't got access to funds still, and still really are living with friends or relatives or in temporary accommodation. So I think it's just missed the mark a little bit with this one from a personal point of view.
Just a little bit.
Gabrielle, have you got any thoughts on it? I know it's not your gig, but you've been in our industry a long time. What are your thoughts?
Ours is feedback from brokers, and a lot of them are telling us that they are inundated with inquiries, so they're really, really busy, but with things that are not going to go anywhere for them. So, people are asking all sorts of questions. I don't have any genuine savings, but I feel that I can now go and purchase a property because I'm going to be getting these grants, as an example. So I think in some ways it's this little bit of a red herring that some people will benefit from, but that it's causing an awful lot of work and rework. And, I'm talking to brokers who are saying they're doing 10 appointments a day just to speak to these people and understand what is their situation and is there a genuine opportunity for them. So I think they could have been a little bit clearer about, what the conditions were around it and what you need.
Well, Michelle, what about yourself?
I can only comment from the building side, actually, because my partner works for Henley. They've had record sales as a result, so.
Wonderful.
yeah, I think they signed up over 100 houses in one weekend, like for one
Nice.
area. So people obviously feel they're going to get this money. You know, I don't, with bank policy tightening and everything else, you're right, it's just going to make everyone busy. Whether there's a good outcome for that, who knows, you know, so whether these people
I
are
think
going to
all the lenders in those spheres need to step up to the plate, make sure they've got their houses in order. One thing everybody has to remember, part of that new stimulus package that started yesterday, people need to get their tax returns done. Without a tax return, you're not going to complete this. So I know that, you know, if you're using tax agents and so on, you've got a delay time that legally can play. But if you want this money, unfortunately, you're going to have to get it done sooner than later. So that's one thing to remember. And of course, one thing I forgot to say, and it's very remiss of me, especially when I've got AAMC with me, is that in regards to best interest duty, now that we've got the final regulatory guide out, which we're still reviewing, because there's a couple of things there that we might need to go talk to ASIC a bit further on. But we'll talk about that more another time. Hopefully mid-August we'll release our 101 best practice guide on implementation of a best interest duty in your business. Now, I reached out to our members at talking about this, and I asked somebody to help me out with the short name, because that is way too bloody long for a name for anything, which some people have kindly come back on. So glad to see they read my emails. So if everybody's got a good name for me for our 101 guide, besides that, then we're looking for it. But we'll have a guide out. And then in conjunction with AAMC and our regulatory expert that sits behind us as part of our team, we're going to be doing a series of webinars on a state basis through from late August into September, dates to be confirmed yet, where we'll talk more on how this best interest duty is played out and what the regulatory guide means. We'll look at what the intent of the law is and what that means to you and your business. It's not about all the documentations, that's your aggregator. So we're not stepping into the aggregator or ACL space. They'll work out how they want you to document and comply within their world, but we'll give you the intent of law and that interplay between a best interest duty, responsible lending obligations under RG 209 and DDO, the design distribution obligations, that really isn't on the broker, but you need to be aware of a part of this and how it forms a total piece of how this all works before we get to 1 January next year when it applies. So I'll give myself a little plug for that on the way through. Watch out for that. 101 guide on best interest duty and then a webinar series. And yeah, I know how the states are starting to open up a bit, but with some of the restrictions in venues, it still will apply. I think it's safer and easier and quicker we get these things done by webinar than try and do face-to-face that may or may not work. So we'll do it that way. And of course, on our previous little piece, just to step back one square, when we're talking about these initiatives that have been put out for the 25 grand on the reno and building schemes and the SME stimuluses, this is not a shot at the politicians behind it, because in all honesty, I greatly treasure the relationship I have on both sides of politics. And they're all good people trying to do their job, regardless of what your influence or leaning is. They're all trying to work through a period of difficulty that we've never met before. I just think they need to engage with the industry more. When they're looking at things that are lending related, have a talk to people on the front line of the industry. We're the ones that have got the knowledge, and that's not necessarily me. I haven't written a loan in God knows how long. But we have an amazing group of people in our industry that can give some very quick, simple guidance on what makes sense and what doesn't. But we are out of time. So ladies, it's been absolutely lovely and wonderful talking to all of you this morning, sharing your knowledge and your experiences and your thoughts and views on the subjects today. I so thank you so very, very much. So thank you, and I'll look forward to seeing you all soon. So thanks very much. We'll catch you later.
Thanks, Pete. Love you to see you all.
Okay.
Bye, Angels. Bye, Charlie.
Bye, Angels. Oh dear, I'm a lucky man. All righty. Thanks, everyone. So
Thanks.
that's a wrap for today. Thanks, Michelle. And next week, here we got Minnie Mouse, because we've got some special guests. And again, it's another lucky week for Whitey. We have a group of ladies who are brokers in our industry. We need to get their perspective on how they see things are going in our game. The other week we had a whole lot of guys on. Next session, which will be in 2 weeks' time, the 16th of July, we're going to have a group of ladies talking about their views on what's happening in our industry. I'm really looking forward to that. Be exciting conversation. But no, it's not next week. It's the week after, Thursday, the 16th of July. So get ready to register for that. We'll look forward to chatting to you then. Once again, thank you to our sponsors. We really appreciate their support. They're great people doing great things, and we're very, very fortunate to have them supporting what the FBAA does. And for now, you'll get an email from us shortly with a little survey on it and your CPD code allocation. Make sure you do the survey for us. It's a big help for us. Thanks. Have a wonderful week, and I'll see you again in 2 weeks' time. All righty, take care. Bye for now.